those stories. Let's start with the day's market action. The last street slipped for the second week in a row as recession fears and hawkish stances by major central banks continue to weigh on the sentiment. Both sensex and nifty dropped over 1% each over the week, tracking weak global cues. Friday's session contributed to this loss, with sensex and nifty dropping over 0.5% each. Remember, they had fallen nearly 1% each on Thursday. CNBC-TV18's Prashant Nair brings you the market wrap. Over to you.
For the second straight session, the market under pressure, and we left off at the low point of the day, almost at the low point of the day, like what we saw on Thursday. Banks were under pressure once again. PSU banks, which had been the darling for the street for weeks on end, they gave up gains aggressively, and that sort of saw through pretty significantly in the bank nifty. Mid-cap, small-caps, broader markets came under pressure. Market breadth as a result was negative. Nifty cuts coming through in names like Asian Paints, Dr. Reddy's. TCS was down sharply. IT index down 1.5% once again. Bajaj Auto, State Bank, Grasim and Apollo Hospitals were some of the cuts. Nothing very large. It's just that there were only 3-4 out of Nifty 50 stocks which were higher. So what was down massively. It's just that very few gainers that we had. Broader losses, broader markets, as I said, -2:1, almost declines outnumbering advances. GMM Fodler came under selling pressure, news flow there. Yes Bank was down after a decent run-up. PNB, IOB, Maharashtra Bank, Union Bank, South Indian Bank, Central Bank, lots of these names which had seen massive run-ups came under pressure. DMart, GICRE were some of the others which lost. Gains coming through, a bunch of fertilizer names, lots of sugar names like Ugar Sugar, Dwarikesh, etc. rallied. There was Raymond, which was higher, and a stock like Nava did well on the back of news flow. We had the company with us earlier on the program as well. I think, global price action is starting to matter once again after a long time. So in that sense, what happens in the US tonight, there is one of the largest options expiry in the US on Friday. Post that, will things settle down a little bit more as we head into the fag end of this year? I think that's the one to watch out for. Back to you.
All right, thank you, Prashant, for that. Moving on, India's monthly merchandise trades deficit has narrowed to a 6-month low of $23.81 billion as exports recover. However, the recovery is marginal and goods exports remain at 11-month lows due to lower prices and volumes. Lata Venkatesh is here with the details. Lata, what's your reading of these numbers?
Trade deficit coming down to $23 billion is very important. It's the lowest since 6 months, as you said. The exports have gone up to 31.9 and nearly $32 billion. And that, as you can see, is much higher, about $2.5 billion higher than October. And of course, higher than year-ago levels. But let's not run away with it. Even at 31.99, it is the lowest since November 2021. So we have to catch up. We are still struggling with lower prices and volumes because of recession in destination countries, but better than October. The goods imports also have come down in November. That's also helping a lower trade deficit. Imports have come down to 55.88 billion compared to 56.69 billion. And no, it is not because of crude. Other imports have gone down, which is very good. So that's why the November trade deficit will come up for you, 23.8 billion compared to almost 27 billion in the previous month, and just a little worse than the year-ago levels. The important part is that the deficit is the lowest in 6 months. Mind you, we are all worrying about current account deficit, so this number is welcome. We must not look at goods in isolation. You have to look at goods and services because India is a big software services exporter. So we look at goods and services. The exports are at 52 billion, a tad lower than what it was in October and what it was a year ago. So that may sound a bit discouraging, but the important part is goods and services imports has fallen drastically. From about 73 billion in October, it's down to 65.5 billion in November. So that has also helped narrow the trade deficit.
Right, thank you, Lata, for that. Moving on, Finance Minister Nirmala